Alright guys, this is my 13.5 cent call that I put out there, and I'll see if I can explain why I think the charts are showing this. Here we go. So this is Uniswap V1 on a daily chart from pretty much the start of Hex, and we had our first run up. So a few things of note. We've got the beginning of a bottom trend line here, which I've drawn in red. Then we've got another sort of trend line in blue, which doesn't look like much of a trend at the moment, but you'll see that sort of play out as we move up the chart. But you can see there's a few points of support here and here and here. And then we've got in green, this is another sort of upper trend line, which is more in line with Richard's random line. So just taking 3 points that we get a lot of touch points on, and as we extrapolate that out, you'll see why I think that's important. But yeah, it was good to do. I don't know if these are 100% accurate way I've got them lined up here, but they'll be close enough by the time we zoom out. And then markets tend to move in waves, and that's where this is where the whole Elliott wave theory comes from, where you get an impulse wave, pullback, bigger impulse wave, which is usually your third wave is the biggest, then another pullback, and then the market tends to get exhausted, and that's the top of the market, and then you go into what they call an ABC corrective wave. So general thing is usually the third leg up is should never be the smallest, it is often the biggest, and that will be apparent when we move forward a little bit as well. So what I'm going to do is take this move that we've experienced before as a fractal, and I'm going to lay that over the chart, and you'll see a few cool things that come out of that as well. All right, so let's start to move along. So we went through our corrective pattern, which is an A, B, C corrective pattern, which is typical, but with Elliott waves and with markets, you get waves within waves. So you have a smaller wave, and then that smaller wave forms the base of the next larger cycle. So the same, the deal with super cycles and things like that. So we have this smaller cycle within the bigger cycle. So I think this first leg up was this first Elliott wave up the full 5 points form just the first leg up of the larger Elliott wave. And we've had our corrective wave here down to 2 in the larger Elliott wave. So then we're moving into what I think we're moving into is now phase 3 of the bigger Elliott wave, which is like we said, should be the biggest. And then if it plays out, we'll have the rest of that wave, we'll have a pullback, and then we'll finish up here at the 5th leg of that cycle. So what's interesting, and why do I see a lot of confluence, is those trend lines that I've drawn. So the red one forms the base of the big overall bottom of the chart, and that's what we've just been through now. And you can go look at any chart, Bitcoin, Link, all of them. What tends to happen is you've got a base trend line, and they move away from that trend line, and inevitably they come back to correct onto it. So I think the blue line is probably more in line with what we should see, but because we had the big payday event, that blew things out of proportion. So essentially you've got a stock split in there, which has changed the chart to some degree. But even still, you can see on this blue line, you move away, you correct back to the blue line, and then we should have pushed off and kept going, but we had big payday, and then we've had to go into this big accumulation zone here after big payday. So what I've taken is a bar pattern from here up to, and I've done it right up to this last point in time, because why not? At least we can drag out and see exactly where this might go over the longer term. So then I grabbed the bar pattern from here, so from here to here, and I've grabbed it. So I'll show you what I've done. So basically that's our bar pattern. I've done it on a different time scale, so that's why it's not lining up exactly, but that is that bar pattern. And then I moved it up to here, to the bottom of our dip here, which represents this same point of time in the cycle. Now you could argue that you could move it here, but yeah, it's all just lines on a chart, so let's just go with something we can do. So I've moved it to the bottom here, and what you'll notice is this blue trend line that we had back here. So remember what I said here, we'll mark out this blue line and we'll see how that plays out as we move forward, and you see it touches here. We're right on that resistance point of that one now. So it was support there, bit of resistance here. We did break through it a bit there, but now currently resistance. So and you'll see that continues all the way up through this pattern. Support, resistance, so that whole pattern plays out. So that's that fractal thing where you can take this pattern, run it up here, and it just lines up beautifully with the price chart, with all the trend lines and everything. So taking the green line, which that was more Richard's trend line, but so we touched there, held there, so it's a bit of a steeper trend line, and you can see even when we extrapolate that out, you still get that where this sits on that trend line, so support and resistance here, resistance up here, so that trend line plays out into the future as well. So there's a lot of things that just line up, and it looks too perfect, to be honest, but who knows what will happen. But that's that's sort of where this tends to sit now. Obviously this is saying 13.5 right now, and I don't think that's the case. So that's what I mean, you can shuffle this here, there and everywhere, and where's the bottom and where's the top, but you can just see the way when you place it at bottoms and things, the way it tends to line up. So technically that's where it should be. So I don't think we're going to get up there that quick. Maybe, who knows? But yeah, I don't think that's going to be the case. That's why I said maybe a bit further down the track we might see that. But just for trying to pick levels and things like that, this may be something worth looking at, where the top of this leg here, this leg up here, this third wave is sitting around that sort of 13-ish mark, depending on where you move these two up or down. But I sort of just drew in a bit of a line there where it may actually sit and hold. But just if you're looking at pure patterns, you might end up there before you come into that big corrective wave again. So this leg of the corrective wave here, which if you're being really, really finicky, would be something like this. Okay, so if you wanted to line all that up, that's how that might look. So that's just sort of some of my thinkings on that. What I might do is I might pause the video and I'll see if I can run some fib extensions and see whether that lines up as well. So do give me a second, I'll have a play with that. But yeah, so that was my call, was the 13.5 cents. Would be fantastic to see it, but let's see what happens. All right, so a couple of other things that I might talk about as well is when we look at this ascending wedge here that we're just ascending triangle that we're just about to break out of, the way you figure out where your target is for that is you grab a point between the top of your triangle, and so if we go, let's say that's the top of our triangle there, and we go to the bottom of the triangle, so that's the range that we've been coiling in, and then you put that to where the breakout was. And I'd done this ages ago, I set that over there, and I actually had it right on that point. Let's zoom in. It's a bit hard to see. There's a bit messy going on. But that yellow line that I just grabbed from the top to the bottom, I've placed up there. I had the breakout point. So you can see I've put it right on our breakout point here. And that busts us up to about 2.5 cents, which is that yellow line I've drawn. So that's probably likely where you'd stop or pause on this breakout. So that's pretty healthy in of itself. And then I've also done some fib extensions. So I took a fib extension for this run up and this pullback to sort of work out where we should have went up to in the next leg up, and you should sort of get in this 1.618 zone as sort of a good guide. And that's pretty much what we done, is we built up to that next level there. Then I've done another one here, which I've partly drawn, but we'll put back down to here, which is where it should sit. Is that right? Yeah, about there, I think. So bottom of that 618, so into that gets us up around that 2.5 cents, maybe into the 3.5 cent zone. So you might break out. So what you could see, let's zoom in a bit. So if you had that breakout past that yellow line, you might, typically what happens is you break out and then you cool back down and you come and sit back on that line or sit around that line, and that starts to form your support there. So you might see the price sort of break up into that 2 to 3 cent zone there, 2.5 to 3.5 cents on this breakout, if it all goes according to plan. And then, yeah, that's at that point, then you're into blue sky for the rest of it. So you'd have to see what happens here to then be able to do your next fib extension and see whether that lines up with all these other crazy lines we've drawn up here. But yeah, that's my sort of outlook. I think this time zone's too aggressive to be sort of April. I'd be very surprised if that does that by April. That would be insane. But in saying shit like that, look how fast this rallied up. Like that's, I mean, different time. That was before big payday. It was a lot easier to move the price, although I think there was a lot more. Was there more liquidity then or not? I'm not too sure. That would have been during the AA though, so I'm not sure how that sort of affects things. But yeah, that's probably a valid point. There was a lot more supply being introduced every day, where we don't have that. So we might all get shocked at how fast this can actually rocket up. So this, I've sort of said July, so I've sort of pushed it out to maybe sort of this zone here, June, July. I think it might get up there. But just remember, like, we were way above this green trend line and the blue trend line, and we've just been way below it. So we've been in this massive dip. So just to get back up to be in line with this green trend line, which we've formed here before. So if we do break up above that green trend line, this is totally doable. That's exactly what Binance, DOT, ADA, they've all just done that on their charts. So you know what happens in crypto. All right, that's my little take. Hope that is a bit of interest to anyone.